Hello, I'm Nicole Garten from Heritage Trust. If you are a Canadian parent and your children live in the United States, estate planning becomes more complex and more important. In today's video, we'll walk through the key things you need to know to make sure your estate plan works smoothly across the border. It's increasingly common for Canadian families to be split across borders. Maybe your adult children move to the US for school, for work, or to raise their own families. But when it comes to estate planning, this raises some red flags. That's because the US and Canada have different rules for inheritance, estate taxes, and the role of executors and attorneys. If you don't account for these differences in your estate plan, it could lead to delays, added costs, or even unintended tax consequences. So let's take a look at how to plan properly and avoid the pitfalls. First, let's talk about executors. In Canada, your executor is the person or trust company that administers your estate when you pass away. But here's the catch. If your executor lives outside of Canada, especially in the US, it can trigger serious administrative issues. A non-resident executor may be required to post a bond, even if your will waives that requirement. They may also need to limit their authority when it comes to Canadian assets, especially real estate or registered accounts. That's why many Canadians choose to name a trust company like Heritage Trust as executor, either as a backup or as a co-executor with their child. Next, let's talk taxes. As a Canadian, you're taxed on your worldwide assets at death. But if your child is a US person, meaning they're a citizen or resident, they also have their own tax rules to follow. Leaving certain assets directly to a US person can raise red flags with the IRS, especially if those assets are held in Canadian trusts, corporations, or registered accounts. And if you name your US resident child as executor or trustee, that can result in unintended US tax consequences and filings. That's why it's important to consider using a Canadian resident executor, such as a trust company or a Canadian resident family member, and to structure gifts and inheritances in a way that won't trigger US tax complications for your children. Trust can be a very effective solution in these cases. If you're concerned about cross-border taxes, long-term protection, or even just simplicity, a testamentary trust, meaning a trust created in a will for your US resident child, can help. But here's the nuance. Not all trusts are treated the same way in the US. A trust with a Canadian trustee may be considered a foreign trust under US tax law. This means your child might need to file complex tax filings, and they can result in steep penalties if done incorrectly or late. Working with a cross-border tax advisor or trust company familiar with US rules is essential to make sure your trust is set up properly and doesn't create more problems than it solves. Let's talk about registered accounts. If you name your US child as a direct beneficiary of those accounts, they'll receive the full amount, but the estate will be on the hook for the tax bill. It's crucial to make sure there are enough liquid assets in the estate to cover the tax. TFSAs and RESPs don't have the same tax deferral treatment in the US and may be considered foreign grantor trusts, again leading to preparing headaches for your child. That's why we often recommend creating these types of assets through the estate, not as direct designations, and making sure your executor has clear instructions. Now, what about US estate tax? US estate tax can apply if you're a Canadian resident, if you own US property or shares in US companies. The US estate tax exemption is currently over $13 million US, but is expected to drop significantly in 2026 unless new legislation is passed. If your estate includes US assets and your child is a US person, careful planning is needed. There are treaties in place between Canada and the US to avoid double taxation, but again, this only works if your estate plan is structured correctly. So what should you take away from all this? If you're a Canadian parent with a US resident child, your estate plan needs to be carefully crafted. Here are 4 things to consider. Name a Canadian resident executor or trust company. Be mindful of tax exposure when naming US beneficiaries. Avoid direct designations on RSPs and TFSAs where possible. Work with a team that understands both Canadian and US tax rules. At Heritage Trust, we help families navigate these complexities every day. Thanks for watching. If this video was helpful, be sure to like and subscribe, and share it with fellow Canadian parents who may have children in the US. If you'd like to learn more, visit our website at heritagetrustcompany.ca, and if you're ready to put your estate plan in place, feel free to book a free consultation. We'd be happy to help.